Hello, everybody. I see some folks coming in. I'm going to give just a couple of seconds to let everybody roll in, and then we will kick off. I can start by introducing myself. My name is Kim. Like many of you, I am a solopreneur. I'm a fractional marketer at Lettuce. I get the opportunity to work with Marcus and Gabrielle on a daily basis. And today we're going to be demystifying business structures, and hopefully we can do this without putting everyone to sleep. Before we begin, I will kick off with just a little bit of session format. So you guys know each session here runs at 40 minutes, and we're going to try to keep it pretty on the dot so that everyone has a chance for a quick break without missing any of the following content. As our presenters are speaking, please feel free to use the chat, put questions in the Q&A. If you see a question in there you love, feel free to give it a +1 or a like so we know we need to come back and get to it. And we will save time at the end of our session to make sure that we have an opportunity for some Q&A. In the handouts, we also have some offers and slides, but we'll go through those in more detail at the end of the session as well. So without any further delay, let me introduce you to Gabrielle Tenaglia from Lettuce Financial. She has spent her career helping businesses grow from Silicon Valley startups to global brands like Xbox and Hulu. And Marcus Edgget is an enrolled agent at Formations, and he's really made it his mission to translate complex tax strategies into plain English that actually makes sense, which we love. And today they're here to do something simple but really powerful, which is to help you understand if an S-corp could be the smartest move for your solo business. The idea is no jargon, just really practical advice that could potentially save you thousands. So please welcome Gabrielle and Marcus, and I will let them take it away.
Thank you so much, Kim. Really appreciate it. Just a couple of housekeeping things. I want to tell everyone that these slides that we're going to look at today are in the handout session. So you can see the link just above the chat box. It says handouts. And you can click on that and grab the slides if you'd like them. Please put questions in the chat. We will leave lots of times for questions today. All questions are good questions. This can be a confusing topic, and Marcus and I are here so that you can ask all the questions and leave this session being as informed as you need to be. We'd love to hear all the things you want to know about business structure, S-corps, and if you want to know more about how Lettuce works, or how Formations works, we can dig into that. And know that right after this, if you have more tax questions and you just can't get enough from our session, Marcus's boss, Shahar Plinner, is doing an AMA on taxes. So if you have questions particularly about filing your taxes for this year, he's going to, I'm sure, go deep into that in that session.
Or even better, like you quiz him on things we bring up in this session and challenge him a little bit more.
See if he knows the answers.
Yes.
I'm going to tell you a little bit about myself to kick off and a little bit about S-corps. And then Marcus and I will have a little chat and do some Q&A. So I am probably a lot like all of you in that I have run my own business 4 different times during my career. And I love running my own business. I love getting to take all the advantages that exist in solopreneurship, from getting to choose my clients, getting to really focus on doing the work that I love, getting to organize my life the way I want it. And one of the challenges that I've had during those chapters of my career is that I have been a chronic overpayer of taxes. And I want to tell you a little bit about that. The reason I am no longer a chronic overpayer of taxes is because my business is an S-corp today. And we're going to talk about what an S-corp is and what it does to help your business. All of this starts with how you set up your company. How you set up your company matters. I ran my business as a sole proprietor for many, many years for lots of reasons. It's the default status. There's no fees. There's no setup work. You just start running your business, you send your clients an invoice, and you're in business. When you're a sole proprietor, you also have no liability protection, and there are no tax benefits to being a sole proprietor. You pay the full self-employment tax, which is super important, and I'm going to dig more into that in just a minute. The second thing that a lot of folks do, and that's pretty popular today, is to become an LLC. I'd be interested to hear in the chat how some of you have set up your business, if you've chosen an LLC or if you've made a different choice. An LLC is a legal status that you file with your state. It's governed by the rules of your state. You get an EIN number, which is essentially a social security number for your business. An LLC provides you liability protection, but only if you actually comply with the rules that your state has set out for LLCs, which typically means that you have to completely separate your business and your personal finances. So you need separate business bank account, separate business credit card, separate accounting. If you have it all mixed in and you, at the end of the year, at the end of the month, are trying to pull your personal expenses and your business expenses apart, you're probably not doing this right. With an LLC, you still pay the full self-employment tax. There are no tax advantages to having an LLC that you can't also get as a sole proprietor. When you start seeing tax advantages is when you become an S-corp. An S-corp is a tax filing status. It is governed by the rules of the IRS. You also have to have an LLC or another corporate structure in order to have an S-corp. A lot of people ask the question like, should I get an LLC or an S-corp? And the answer is that you need to have both. They serve different purposes. They are governed by different rules. S-corps are specially designed for small businesses. The IRS created S-corps specifically to have companies like yours and mine succeed, to help us do better. You have to have less than 100 shareholders to have an S-corp. I run my S-corp with just one. It's just me. S-corps are not subject to federal corporate taxes, which is important. You don't have to pay taxes on the company income and then pay taxes on your own income. And S-corps lower your self-employment tax. Finally, the last structure is called a C-Corp. It's typically meant for bigger companies. You do have to pay federal corporate taxes. But the reason I mention it is because in many states, if you are in an industry where you have to have a license from your state in order to practice, like if you're a therapist or you're a lawyer, the state often requires that you do something called an LLC or a PLLC or a professional corporation. And that's a C-Corp with an S-Corp election. And we do that for our clients. We do it all the time. And so if you are a solo therapist, for example, you would get a C-Corp with an S-Corp election, which gives you all the benefits of an S-Corp. So why does all this matter? Well, because being self-employed costs you an extra 7.65% in self-employment tax. What is this tax? When you're employed, excuse me, I'm just getting over a cold. When you're employed as a W-2 employee, you'll see this show up as FICA tax on your pay stub. It is Social Security and Medicare taxes. And when you work for someone else, you pay half and they pay half of the required amount. But when you work for yourself, the government sees you as both the employee and the employer, and you pay double. The total amount that you need to pay on your income is 15.3%. When you split that with your employer at 7.65%, it doesn't feel like as big of a lift. When you are paying 15.3%, it's a lot of money. And if you're making $70,000 or $100,000 a year, it can really add up, the 15.3%. So what an S-corp does is it reduces that self-employment tax. It cuts the amount of income that you need to pay that 15.3% tax on. And I'm going to explain how. On the left, if you are a sole proprietor or an LLC and you make $175,000, your taxable income is about 92% of that. So it's $162,000. You pay 15.3% self-employment tax on that total amount, which comes to almost $25,000. Then you also pay your federal and state income taxes in addition to that $24,000 or $25,000. If you have an S-corp and your revenue is $175,000, an S-corp structure requires that you pay yourself a salary as an employee of your company, and then you take an owner's distribution as the owner of the company. So your salary might be $70,000 and your owner's distribution $105,000. You only pay that Social Security and Medicare tax on the salary. So in this example, it's 15.3% on $70,000, which is about $11,000. So you save over $14,000 on self-employment tax before you even look at any other benefits, deductions, or savings. So we're going to talk a little bit about S-corps. We're going to talk about other benefits to your business. Please put questions in the chat or in the Q&A. And Marcus and I are going to talk a little bit about what it takes to run an S-corp, how hard it is to do, and why it's important for your business. Marcus, can you tell us a little bit about what it takes to actually not just set up an S-corp, but run it on an ongoing basis for your business?
Yeah, so S corporation, as you just said, it's the tax saving structure, right? A lot of people should do it. We'll get into more specifics in a little bit. But an S corporation, you can't just wake up one day and be like, yeah, I'm an S corp. I feel like it. I'm feeling the vibes. I want to save tax. I'm an S corporations. Now, I like the question, how hard is it to set up? I would say for the average person, if you don't know anything about tax, it can be pretty tricky. There's a lot of forms, there's a lot of compliance, there's a lot of pieces. But as long as you know what you are doing, nothing can be that hard. And S corp, it's true for that as well. Really, what you need to do, an S corporation, you need to have an entity first. So you have to have an LLC or a C corporation or other type of entity. Then you can tell the IRS on a form. That form is called 2553. Hey, IRS, please tax me as an S corporation. Have a nice day. Once you file that form, the IRS will be like, cool, got it. You're an S corp. Have fun. Now it's time to run the S corporation. That's why it can get hard. That's why it can get challenging, because as we just said, you need to have what's called reasonable compensation in an S corporation. You have to take payroll. That means you have to have a payroll system. That means you have to have a payroll provider. That means you have to remit the taxes. And for a lot of self-employed business owners, this is where your head starts to spin. I'm probably already losing some of you as I'm talking about this subject. But yeah, you have to run a payroll. Then you also have a separate tax return filing. It's called an 1120S. 1120S is just your business P&L and balance sheet and all those pieces on its own tax form, and it tells you how you get taxed on your personal tax return. So how hard is it? Well, it can be simple if you find the right solutions, but you can see that there's a lot involved in a lot of pieces.
So a number of years ago, my financial advisor looked at what I was making and she said to me, you are totally getting killed on taxes. You need to set up an S-corp. And I said, I kind of rolled my eyes because she was always telling me things I needed to do to save on taxes. And it often took a lot of time and effort on my part and didn't ultimately save me that much. And so I asked her how much I could save. And the number was like a full year of preschool tuition for one of my kids. My kids were little at the time, which seemed absolutely worth it. If you are making $100,000, you can save $10,000 approximately with an S-corp. And so when I looked into this, the work that I had to do to actually run it, setting up my LLC, setting up my S-corp, but then doing the ongoing payroll, paying the payroll taxes for myself as an employee, creating a W-2 for myself as an employee, all the additional tax forms, I said, there's no way I'm going to do this. I'm working a ton in my business. I'm going to spend my weekends doing all this S-corp compliance paperwork. And I'm probably doing half of it wrong because handling my own taxes is not what I do best. I said, would you run it for me? She said, no, we don't do this for our clients. How often do you find that the work required is a barrier for people to setting up an S-corp?
Oh, 100%. But it's not just the work. It's honestly finding the right professional that can help you in your situation with it as well. Because I think people go to professionals for advice and guidance, but not every tax professional knows every piece of the tax code. They don't know necessarily how to do it. They don't know how to do it the best way. They don't know how to do it the right way. And they make a lot of mistakes. Either that means that they will not give you the best guidance so you can actually get into these structures, or they're going to price you out of it, which is also pretty villainous of them as well. So this less qualified person is going to charge you a lot of money to do something I just told you how many pieces: payroll, tax returns, rules around the compliance. They're not equipped to handle it. And that solution, well, now it exists, thankfully. But before, that's what you might have been running into with your professionals. They want to try to charge you a lot of money just to even get into the room. It's a hard barrier to entry if you don't know where to look.
And that's the beginning of the answer to the next question. Why, I had been running my own business for years and years before my financial advisor finally said to me, she was relatively new. We were in a newer relationship. Why didn't I hear about it before? Why I go and talk to groups of solopreneurs all the time. And so many people will say, I haven't heard about this before, or I just heard about it for the first time. Why isn't it more well known as a tax strategy for solo businesses?
So everyone on this call, remember this point forever. IRS does not have a marketing department. The IRS has no vested interest in telling you how to use their code to save you as much money as possible. So there's not a blast going out. If you're not, again, talking to the right person, I've seen people come to formations. I work for formations. They come to formations and they have been in business for 20 years and it's the first time they're hearing about it. That might be true for some of you on this call as well. Well, there's first part is that the IRS doesn't have a marketing firm. They're not going to tell you. The second piece of it ties back to that first answer. It's like I knew we were leading up to this or something. The professionals might not know about the structure. We tend to shy away from things we don't know much about, or they might know about it, but they don't actually know how to use it to help you, and they want to keep your money. I don't know. There's probably some good faith things in there. I'm giving you the spicier reasons, but that's the main reasons why you might not have heard of it, or maybe you have heard about it, but you didn't have the right support to get you to the next step.
I think that what's often true, and having spoken to a lot of accountants about this, there are some accountants who specialize in businesses like mine. There are many accountants who don't. And they just don't, like you said, they just don't have enough clients who have this need to have invested in this expertise. And often they just don't know. I've had lots of people come and say, well, my accountant told me X or my accountant told me Y. And it's just, there are things that just aren't true. And it's always hard to know if there is a miscommunication or a misinterpretation between the accountant and their customer, which I think also happens because taxes are confusing. And as you know, accountants often speak their own expert language that normal humans like me don't always understand. And so there's a few barriers that kind of get in the way of S-corps being more well-known and more understood.
Yeah. And they actually kind of want to keep it murky because, again, if they're not comfortable, people like knowing what they do. A lot of accountants, and some people, accountants are just bookkeepers, which there is a difference, but this is not the presentation for that. Some people are just bookkeepers. They are basically taking the position of not my job, not my worry. I'm just going to do this, but you're relying on them for guidance in that space. Well, that person's not qualified, but you don't know they're qualified. They're not going to tell you they're not qualified to save you all the time. They're going to say, yeah, I'm the best bookkeeper of all time or best accountant of all time. This is why this can be so challenging to hear about these proper tax structures and not just get them hearing about them, then actually getting it set up, as I said, is the other hurdle. So, Gabrielle, it's complicated, right?
It is complicated. Folks ask us all the time, is an S-corp right for my business? How do you know when is the right time? Like I'm sure got a whole spectrum of folks at this conference and in this session who might be thinking about starting their own business, who might be early starting their own business, or who might be years in. When is the right time to set up an S-corp for yourself? When is it right for your business?
So Gabrielle, there's the right answer, and then there's the answer that actually is going to help people and help them drive action. So the right answer is, well, technically, as long as you're profiting, yes, you could be an S corporation. But honestly, I told you all the requirements. I told you the compliance. I told you there's tax returns involved. You got to make it affordable because I assume most people on this call, you're not tax and accounting experts. Or if you are, there's your education session, I suppose. But if you do need to get support from professionals or from a group to help, it's got to start around $60,000 of profit. That's usually where the compliance, the stress, the cost is worth it at that point because you can usually still take some dollars at the end of the day after you get all the benefits in place. And that's just from the S corporation benefits. If you have the right people, you'll get even more of the benefits by working with the right people.
So we often tell people that that's the right to use a service like Lettuce. That's kind of the right break-even point. And we have a tool, a tax calculator tool, where you can go in, you can put your income and your state in your projected income and see a savings amount that and running your S-corp with Lettuce would save you. And so right around $60,000, depending on the state that you're in, is when running your S-corp, the cost of running your S-corp and the savings that you're going to get start to be about break even. And then after that, every additional dollar you make is money that comes back to you. So that's, Marcus loves to tell people every solo business should be an S-corp. There's lots of benefits. And the practical, like he said, the practical answer is you want to make sure to balance the cost of running the S-corp with your savings.
And again, the cost is not just financial. It's your burden. It's your stress. You talked about your story, Gabrielle, right? There's just so many small considerations that when you don't have the support as business owners, like, oh man, it's overwhelming.
How can an S-corp be a growth strategy for your business?
So S corporation as a growth strategy, it's if you are looking at, you're at the point where you're like, yeah, S corp, I heard about it, I'm ready. Why is it a growth step? Because now you're taking that next serious step to be a business. Honestly, I like to tell a lot of people that work in the solopreneur space, but it's also true of very small businesses. I think there's not like a switch in your head where all of a sudden you're like, yeah, I'm a business owner and I'm going to run all the business things and I'm going to do this and that. I don't think it quite works like that. You usually start a business because you have something you're interested in, something you're good at, something you found you can market, right? Or maybe you inherited it, but mostly you have a passion for doing something or an interest in doing something, or you just want to make money. Becoming an S corporation, that's like a serious step. The first step is create an entity, like we talked about earlier. You should, if you're a serious business, you got to start with an entity, but an S corp, now you're actually thinking growth. You've moved on from I'm a basics, I'm getting the things set up that I need to set up. Now it's about optimizing. Now it's about saving tax, saving money, being in the right structure, right? That's what an S corporation offers. You're taking that next step because again, with S corporations, you have more bookkeeping requirements. You have more, you take this payroll. You also have a lot of benefits from that structure. You're seen more seriously as a business. You can be like, yeah, fancy business card, I'm an S corporation. And then you could be like, what's an S corporation? You're like, oh man, Marcus and Gabrielle told me all about these things. Let me tell you what you can do. You can preach the message of S corporations all over the world. But this is about treating your business seriously, making sure an S corporation is the next serious step. And then obviously I didn't even mention it because it's been mentioned 5 times before this. You'll save money. You're going to save money doing it as long as you have enough profit. So more money in your pockets and more potential to grow. Your business treated seriously, all the benefits that I just said.
I think that's right. I think your thought that this is not just about saving money and having more money to invest back into your business or to use in your personal life, but there's also a discipline around running your business in the financially in a way that a business should be run.
I don't want to say correct.
Yeah, it's not. I mean, correct is all.
No, you did it right.
It's all based on what's right for you, right? And that's one of the 100%. Great things about running a solo business is there's no one way. But also there is this emotional benefit. And I hear this all the time from our customers. There's one woman who said to me, my kids were always telling me, Mom, when are you going to get a real job? When are you going to get a real job? And she said, after I set up my S-corp, I started telling them, I'm a business owner. When your friends ask what your mom does, you can say she is the CEO of her own company. So there's this mind shift that happens. And I had another woman tell me, once I did this and started thinking about myself as a business, it actually forced me to start thinking about like, how can I diversify my revenue streams? What can I sell that doesn't require me putting in an hour of my time to get an hour of, to get an hourly rate? Is there a different way I can think about my business? And so it has both these very tangible financial benefits and the sort of structural benefits of running your business in a certain way, but it also has these emotional benefits that help you think differently about your business.
Of course, Gabrielle, you alluded to it a little while ago, like just a second ago. We just did a masterclass here at Formation that was a deep dive financial equity, cash flow, deep dive tactical strategy session for a lot of real estate agents. That's the people that were attending it. And then it was a 3-hour, 5-hour long session if you include lunch. By the end of it, they're drowning in how many things they have to do at that point. Well, I got to have this home equity line of credit, and I got to find this cash and do this and that. And I'm like, well, at the end, you got to start. You got to do something. S corporation and forming an entity, those are really, if you are like, man, I'm just still a solopreneur, I don't know where to go. That's where you need to go next. You need to start setting up your entity. You need to start, again, treat your business like a business. That's when you can get in the right mindset to do what you just said, Gabrielle. So I really like that point.
So I'm gonna share one slide just about how Lettuce helps you do this really efficiently, and then Marcus and I are going to move to Q&A. So please put your questions. I see there's a couple of questions in the Q&A, so we'll move to that in just a second. What we do at Lettuce is we automate all of this work for you. You come in, takes you about 10 minutes to give us your information. If you have an LLC already, you can give us the information about your LLC, and we'll use that LLC to set up your S-corp. If you don't, we start from scratch. We set you up as an LLC and then an S-corp. And then we take care of all of the financial compliance and the accounting that you need to run your S-corp. And then we facilitate the tax payments that you need to make throughout the year. And we do all of your tax forms and tax filings. We also have started doing personal tax filings for our customers included in the cost of running Lettuce. So there's a lot of value there. We do the taxes for your business and your personal taxes. And you get a dashboard with your income, expenses, deductions, up-to-date snapshots of your cash flow, predictions of your income and tax payments, and recommendations for the best tax saving strategies. So we help you understand what else is available to you as a business in order to save on taxes. And I will say Marcus comes from a company called Formations. That's why you can see a different logo there. And we are Lettuce and Formations are partners. And the difference between our companies is that we run essentially an automated software version of this process. And Formations has a more concierge approach. So if your business has different needs, or you just want more, you want a regular quarterly meeting with someone like Marcus, then Formations is a good fit for you. But we're running the same playbook. Our playbook for S-corps, the way we run your business, the way we think about taxes for businesses of one is the same across the two organizations. So I'm going to turn to the Q&A. First question, how is owner's distribution taxed?
That's an excellent question. So let's say you're an S corporation and you're taking distributions. Those distributions, just by the act of distributing the money, is not a taxable event. What I mean by that is, let's say you earned $150,000 of net income in the year. You took $100,000 out of your business bank account and you sent it to yourself. That does not create any tax. The profit of your business is still taxed like it would be taxed otherwise, right? You're subject to income taxes with the IRS. The actual distributing event is not taxable in any sense. You really only need to look at your profit and loss. That's where the S corporation, the payroll piece comes into, though. You have to take reasonable compensation. So you're allowed to take that owner's distribution because you're taking a reasonable compensation with your S corporation. So you don't have to worry about taxing in the future. I think the next question is a good tie into this as well, if I remember correctly.
Yeah, let me see. And I'll just build on Marcus's answer to say that that distribution is taxed at whatever rate your tax bracket is for the federal and state taxes. So if it's, I don't even know what the right amounts for the brackets are, but if it's
24, married, it's like 24%.
24%, you'll pay 24% federal tax, and whatever, you know, California, the state tax is 8% or something in some places. The number's much lower. But so that's how you could estimate the tax you owe on the distribution. Marcus, Carolyn has a question. As a solo S-corp, how do you arrive at the owner's distribution versus salary? Is there a typical ratio?
So there is a lot to talk about. I'm going to take a quick second to remind, this is the best time to start adding all your questions to the Q&A. So if you're thinking or you hear something, you want to get more details, start adding them now while we're answering this question. So this is your time. You have access to some great people. Specifically at owner's distribution versus salary, is there a typical ratio? The most important thing that I have is, I keep saying reasonable compensation. It's not a big part of that presentation, but really you have to pay yourself something called reasonable. Then you're asked, well, you're telling me reasonable. What is reasonable? Well, I would like to ask the IRS the same question, because they don't define it. They don't define it very, very strongly. They give you a vague, all you say is you have to take reasonable compensation. Now, the IRS does have other rules to set it up, and someone would follow it. Lettuce takes the approach, I think, of setting a rate, though, that is widely accepted. Is that right, Gabrielle?
That's where we start. And then, you know, the benefit of being a tech business is that we can consume lots of data. And so we start you off with 40% salary and 60% owner's distribution. And then we look at the income coming into your business. We look at what the typical salary is for someone doing your job at your level in your state. We look at how the work that you might do in your business could break down into, like, sometimes I'm a marketer. Sometimes I'm doing the expert marketing work that I'm really good at. Sometimes I'm doing pitching and proposal writing, which is a different job and might be charged out at a different rate. Sometimes I'm cleaning my office, which is a different job that might be charged out at a different rate. And so we put together a defensible number based on the data around what someone in your position might earn. And we calibrate your salary to that number.
That's all excellent data. And I like to always add like the more actual what happens in real life pieces. I've seen S corporations not run a payroll for years and never have a problem. I saw S corps get audited in year 2 and it's a big problem. So the point is there is guidelines that you should follow if you want to be comfortable with your positions and have a really structurally audit defensible S corporation. This is how you do it. You follow Lettuce and Formation's playbook. You determine reasonable salary and you run it. But again, this is why I said, well, the IRS does what they want to do. You could be that lucky person who never gets audited, but I'm not going to sign off on those returns consistently. I'm going to be like, come on, follow the rules to the best of your ability while saving you as much money as possible. That's what's important.
So Alana has a question, and I'm going to just check and see if I understand it here. Back to the distribution question. Mm-hmm. Is it the standard? She's understand that you get charged the standard tax rate, but is there no additional self-employment tax on the distribution? So
Elena, you're understanding it perfectly. That's why the S corporation saves you money. Every distribution that you can take, by the way, you are saying distributions. That's why I answer that way. You can also just leave the money in the bank account. It's going to be taxed exactly the same whether you distribute it or not, right? So distribution does not cost tax is what I'm trying to say. But yeah, the self-employment tax will only be on what you take as payroll. You can't distribute past your payroll amount, right? Because you've already paid that to payroll. So payroll is one function of it. Distributions is the other half if you want to take money from your business. And we can get into strategy more about, well, how much money should you keep in your business account, things like that. This is where, once you're an S corporation, the whole world of what's the best structures and how should I treat my business effectively, these conversations open up to you when you start taking these structures. So I hope that answers it. If it's still confusing, happy to take another stab if you rephrase it. But no, distributions are only taxed because your profits are taxed. Self-employment tax is only on your payroll in an S corporation.
Marcus, here's another question. If I didn't start an S corp in January, does it still make sense to start one now? Is there a best time of year, or is there a deadline?
So the best time, let's say you don't have an entity, you cannot do an S corporation. So if you don't have an entity today, February 27th, and you're just a sole proprietor, I'm not sending you away. I'm actually telling you, well, now is the right time. Now go make your entity. Now is the best time if you're not already one. For you lucky people who already have an entity, you actually can look back and maybe become an S corporation even earlier. So if you do have an entity, you're not an S corporation, and you're like, well, these savings sound cool. Is it too late for me? Maybe not. This is where you got to kind of be more assertive and like, yeah, we can probably do something there. But you need to start with an entity. It's the first part.
So you set up your LLC. If you and this is great because there's a deadline coming up soon to clarify this for folks. If you were running your business as an LLC in 2024, it is possible to backdate your S-corp election for your 2024 taxes. So that might be a bonus savings that you weren't thinking that you could capture.
This is why it's the end of webinars.
And the deadline to do that, is the deadline to do that March 15th?
So that is actually not the deadline. It does get a little bit more confusing if you do it after March 15th. You could still do it technically 3 years and 75 days in the future. To keep everything really simple for everyone listening, yeah, you have 3 more weeks. Go have a conversation and let's get some action going on this topic rather than making them wait any time. But technically, you do have more time if you want to be that person.
So
technically,
March 15th is a deadline, maybe not the last deadline. I will say that we don't backdate S-corps at Lettuce, but our partners at Formations do. So if you are interested in being a Lettuce customer, we could help you make that happen and then run your S-corp moving forward. And so that's if you want to backdate. Now, if you're interested in becoming an S-corp now for 2025, you can do it anytime. We set up your LLC for you. We set up your S-corp. You are able to turn it on and start capturing the savings moving forward at any time during the year. We had people in September and October elect to become S-corps because they knew they had big income coming into their business in the last quarter of 2024, and they wanted to capture the savings for their S-corp.
I'm going to tie one more piece to this. So this is the fun facts. If you decide, and this is just tying all the concepts together, but this is again why you try to get professionals' inputs on things. If you open an entity now on 227, but you're like, well, I don't have 60,000 net profit, or I'm not sure what my year is like. Because self-employed people, you don't always know what your income's going to look out for the year. You have a guess, but who knows what's going to happen. You could actually then, if you form the entity today, next year you can go do a late S election on your entity now, just like I talked about. So tie those two concepts together. Go make an entity if you don't have one, because you can still make that S corporation election later this year when you do know your profit. This is where you can be strategic about it.
Now, Alana is asking a fantastic question about retirement planning. What happens when that owner's distribution is used to fund a 401k pre-tax?
So if you are doing things correctly, you are funding the 401k ideally from your wages as an S corporation and through profit sharing for the business. So your distribution still should not be impacting your retirement contributions. In fact, this is something I meant to hit on in this presentation. I didn't get to it when we were talking about growth. Your benefits and your retirement strategy are a key part of your business, whether you're an S corporation or not, by the way. But with an S corporation, there's specific rules that, again, distributions, again, and I see this a lot on, so this is excellent that you bring up these questions. You're very fixated on the distributions. All that really matters, profit, payroll, profit, payroll. Those two pieces matter a lot. As long as you're taking reasonable compensation, distributions, you can take them as you need to fund your business. Now, that might be because there's people that have been audited in the past and they hear things about distribution. So again, this is why it's sensible that you're asking questions. This is when you got to get more personalized advice to your situations. Because again, I don't want to say it depends for an hour of a webinar, but yeah, your situation, it can slightly vary. So I hope that helps continue to answer.
So as an example, I funded my 401k partly from my salary because that is, that was you do an employer contribution and an employee contribution. So that was my employee contribution to my 401k. And then as a business, I made an employer contribution to my 401k. So that's, the money comes from two different places. And then Alana, the money is tax deductible when you make those.
And this is a good time to also mention, a lot of you might have what are called SEP IRAs. I'm here to give you the best free advice that I can on this call. You need to look at a solo 401k instead even if you're not an S corporation. If you have a SEP, you instead should look at doing a solo 401k 99.9% of the time. It will be better. So again, this is one of those professionals aren't offering up because maybe they don't know it. They're not comfortable. SEP is easy. I know SEP. Everyone knows SEP. Solo 401k is about the similar cost for way more potential future benefits, especially if you get the right strategies involved with it. So there's another fun fact.
So I want to wrap us up and give Kim time to close us down and send us to the next session. I will say, if there are questions that we didn't get to today, you can always email us at support@lettuce.co. We do have a special running where you can get a free month of Lettuce plus a free 2024 tax return using the code SOLOVIP. So if you are interested, please reach out if you have more questions, or you can go ahead and sign up. And again, Shahar's session that's coming up next will address a lot of the questions about 2024 taxes that I'm sure folks have.
Go ask him if a SEP or solo 401k is better, and we'll see what he says. He might tell you he might give you an answer like, well, SEP's okay for this, but 401k is better. But anyway, there's a free Q&A question for him.
And we'll hopefully see you all at the Solo Challenge that starts on March 3rd. Thanks so much. Back to you, Kim. Oh, do we still have Kim to close us out? I can close this up. Here she is.
Oh, there she is.
Hi, I'm so sorry. Thank you. I couldn't get off camera. That was wonderful. Thank you guys so much for everything. We really appreciate it. As Gabrielle mentioned, I do want to give one other shout out for the Solo Challenge, which is the whole idea of that, you guys, is to take all of the insights from this 2 days and apply them and take action going forward. And so this is a perfect time for you to learn more about S-corps, take the next step, or just come find us at lettuce.co/challenge. And there's a whole bunch of challenges, templates, tools, everything you need to get your business moving. Thank you guys very much. And we look forward to seeing you in future sessions this afternoon. Bye, all.